Bitcoin mining firms have been losing money over the years. Basically, none of them are profitable. We have some charts here. We're going to talk about it. Okie doke. Data shows most of the public Bitcoin mining companies have been accumulating losses during their lifetimes. As per the latest weekly report from Arcane Research, out of the public miners in the red, Core Scientific has especially large losses of 1.3 billion US dollars. The relevant concept here is of retained earnings, which is a measure of any firm's total accumulated net income during its entire lifespan. When this metric has a negative value, it means the company in question has incurred a net loss over its lifetime. Here's a public chart that shows the data for the retained earnings of the largest public Bitcoin mining companies. Argo is the only one in profit at 26 million. And then going from there, Bitfarms has basically a loss of 137 million in retained earnings. And Core Scientific has the 1.3 billion, right? So what they're talking about here, and this can get a little confusing because if we looked at this, let's say at the height of the bull run in 2021, it would look quite a bit different, right? Because the way this is calculated is going to basically come into play with the price of Bitcoin now, how much the companies are holding of that Bitcoin, and kind of what their cash flow is. But then it does bring up the question, how many people, including myself, over the bull run actually made enough to, if we would have held, right? And that's really it held the cryptocurrency itself. How much would you have ended up being in the loss for, right? I would argue that most people went negative or were completely unprofitable when mining Ethereum. And I know this because of the way people would talk about basically holding it. So essentially, if you're in a hodl pattern and you mined, through the bull run, and then you held everything that you mined with an anticipation of it going up and it absolutely collapsing, then obviously over the lifespan of your mining farm, you ended up in a position where you have lost or been, basically had a net loss. So then that goes back to the, what is the mining strategy overall? Because we've talked about this before. And some of my biggest mistakes have always been not having a strong enough cash position. I think I held on to about $20,000 worth of cryptocurrency from the bull run through till maybe October of last year or something, where it took basically, a 50% cut. And that really wasn't a smart way to handle it. It would have been better to have a stronger cash position. Now, my strategy has always been to pull out a cash position and purchase more silicon. But now we have other things that are coming into play too. And with the bear market, you end up being in a position where there's nothing that's profitable, right? So not only have you held on to your crypto for too long to where it's worth nothing now, but now you have no capital to actually invest when you need to invest, right? And this is where we start to see some of the acquisitions happen within the cryptocurrency space. And I think the acquisitions are going to be even more severe here over the next few months. But it does say, as you can see in the above graph, the retained earnings of almost all the public Bitcoin mining companies have been negative. This means that over their lifetime, these firms have been racking up some net amount of loss. Core Scientific is the deepest into the red, with the miners' losses amounting to more than 1.3 billion. Riot and Marathon are the next most underwater mining firms, but they both still managed to keep their losses less than half of Core's. Argo is the only public miner that has retained earnings greater than zero and it has accumulated modest profits of about 26 million over its lifespan. The report notes several reasons behind the poor performance of these companies. First, these firms have been spending very excessively on administrative-related costs compared to their other industries like gold mining. The second factor is that Bitcoin investments of these miners didn't turn out favorable. Under the bear market pressure, they had to sell off their reserves to de-risk and avoid liquidation. And finally, the highly profitable bull run of 2021 led to the mining companies overexpanding their facilities. The record profits of last year were gone as soon as the bear hit, leaving miners with an abundance of facilities that have been producing much lesser revenue. In addition to that, right, what we saw was pre-orders basically for a bunch of mining hardware that now is worth essentially, 300% less. It's basically worth like a third of what some of these rigs were going with, where, S19 Pros were hitting, 10, 11, even all the way up to like 14 grand, are now selling for like 3 grand. And that's going to all go into that balance sheet and really put a lot of pressure on it. If you were in a position where you were pre-ordering a ton of ASICs during the bull run at a much higher value and they didn't even get delivered, which in most cases that's what's been happening, they didn't even get delivered until the bear market, it's like, okay, now you're just way underwater, right? At the time of writing, Bitcoin's price floats around 19,300, down 1% in the last week. Over the past month, the crypto has lost 3% in value. The below chart shows the trend in price of the coin over the last 5 days. So, principle being, like, obviously, like, we look at this so that we can have a better idea of what to do in the next, or I look at this to have a better idea of what to do in the next bull run. And I think that putting yourself in a better cash position is definitely the way to go. I think still adhering to like the basics is a good idea. There were times when, I would talk to people and they were like, yeah, I'm taking out a loan to do this. And I got like a little, a little jealous to expand, right? Like I wanted to expand further. I kind of was like, oh, I could go take a loan out and expand. And if I would have, I'd be in a much worse position than I am now. Because at least all the equipment, I own. I do have, like, the only thing that I accumulated debt-wise was, of course, the facility. And that was, by and large, the worst decision I made. So if I look at it from that perspective, I think any kind of loans, anything like that, is going to put you in a terrible position. Or it would have put me in a terrible position, and now I kind of dodged that bullet. While I look at like some of the people that were building out around me, we had miners move in, like I had talked about before, some ASIC miners, 2 of them, they're shut down completely and they're completely liquidated at this point. And that means like cleared out, canceled leases, all that type of stuff. So, I didn't do it perfect, but I didn't do it the worst, I suppose, is the point. And I think like learning from this stuff can put me in a much stronger position once we get like rolled through this bear market and back into a bull run, right? And that's kind of the entire point. And I think, yes, being in a cash position during a bull run would be beneficial. I think the concept of hodling Bitcoin and hodling crypto when everybody is telling you to hodl it is when you should sell it. And that's not financial advice. That's what I'm thinking personally. If people are yelling at me to hodl Dogecoin to hit $1 and Dogecoin's sitting at 60 cents, I think it's probably time to sell. That's just the way it is. Yeah, and in the bear market, have a cash position to purchase hardware. That is basically the goal. And then that could put you in a positive position. We have to go look at basically what Argo did here, right? But I bet you, like we've seen, because Argo's been buying out a lot of people, I bet you Argo is playing off of that strategy, right? While what we've seen with all the rest of these, remember, boys, and Core Scientific was like the number one that was like, we're expanding, we're getting more ASICs, and we're borrowing here and doing that. And like we've been tracking most of these guys for a while, and that's been their strategy, right? Buy more miners all the way through the bull run. And it's almost like you buy, it's almost like, when I think about this in general, you just don't buy anything in the bull run. It almost feels like in the bull run, you don't buy anything. You sell everything. I don't know. That's what it feels like. It's what it feels like. And what marks the bull run? If you go over all-time high, then I guess start... I'm thinking like basically once we go over all-time high next time, I'll start basically dollar cost averaging out. And that includes the actual mining hardware as well. All right, so is Bitcoin inflation hedge? Investors are still unsure. Bitcoin has risen about 6% over the past week amid growing macroeconomic uncertainty. Bitcoin regained the $19,000 level Wednesday as industry watchers pondered anew whether the largest cryptocurrency would become a go-to asset in times of high inflation. Bitcoin was recently up about 3% over the past 24 hours and roughly 6% over the past 7 days, according to Masari's data. Following philosophy of buying when there's blood in the streets and the common saying of being greedy when everyone around you is fearful, we might be at the opportune time to start slowly placing capital, end quote, said Shiraz Ahmed, managing partner at Storm Partner. The macroeconomic environment has had an increasingly significant influence on the crypto market in the current bearish sentiment-filled market cycle. Bitcoin's latest rebound Wednesday followed the Bank of England's announcement earlier in the day that it would buy bonds after the government's tax cut plan triggered a massive sell-off. Painful inflation has led banks, including the Federal Reserve, to pursue aggressive interest rate hikes, putting downward pressure on prices of risky assets from stocks to cryptocurrencies. The global crypto market capitalization has dropped from $2.9 trillion in November to $959 billion now, according to CoinMarketCap's data. Quote, I think that crypto is just following the same trend as the market, and it's just pure risk-off appetite because of the current volatility and uncertainty, end quote, Defiance ETF CEO Sylvia Jablonski told CoinDesk TV on Wednesday. And I don't know that I agree with that. And this is the tricky part, and I'm probably completely wrong because I'm not, I have zero experience in traditional markets. My whole entire perspective of traditional markets and essentially the stock market and Wall Street was, basically that whole image of a VC dude that is basically, faking it till they make it. I've never liked it. I just have always avoided it. I've always been more of the guy that would be inclined to go do some sort of manual labor to get my paycheck, as opposed to working in that whole thing. I felt like it was always scammy, and I never liked it. So I don't have any experience in it. I probably should have paid attention more because then it would have helped me with where we're at now. Because I don't know the difference between essentially what our traditional markets are doing right now and what Bitcoin and cryptocurrency is doing right now. My only argument that I've had for quite some time now is that if we were looking at a traditional halving cycle of Bitcoin, I would expect Bitcoin to be right where it is currently at. So it makes it tricky for me to understand if we are following traditional markets like Sylvia is saying here, or if this is just part of the halving cycle. And I might even go back to what we talked about yesterday, which is I think over on Twitch, I said just trust the process. So me personally, I'm trying to just trust the process, even though, at the end of the day, it's extremely difficult to just trust the process. All right. So, if the stock market rally is able to overcome hard landing fears, that should provide a nice backdrop for cryptos. Edward Moya, senior market analyst of Oanda, wrote in a Wednesday note, this broad risk-on rally doesn't seem like it has legs to stand on, but this bounce could last a little longer. Ethereum rebounded above $1,300 Wednesday, up 1.1% in the past 24 hours and 6.9% in the past 7 days. Ethereum has appeared to show a greater inflation resistance since Ethereum's historic merge shift 2 weeks ago to a more energy-efficient proof-of-stake blockchain system. Ethereum's annualized inflation rate since the merge is around 0.19%, lower than Bitcoin's 1.75%. Alexandra Lores, a director of blockchain market research at Quantum Economics, expected the inflation rate rivalry between Bitcoin and Ethereum to continue fluctuating back and forth between now and 2024. The ETH to Bitcoin ratio, which measures the price of ETH relative to Bitcoin, started falling after the merge to the current level of 0.06. Laura said he wouldn't buy the Bitcoin ETH inflation rate flipping narrative until the ratio breaks its all-time high record of 0.15 in late 2017. And then we also have to take into account that if we're talking about, I would say that Ethereum would technically follow traditional markets more closely, especially once we start talking about the SEC regulation and jurisdiction problems and centralization issues and so on. But, maybe all those just work out and ETH becomes the hedge against inflation. Maybe. I don't know. I'm going to stick with my Silicon plan personally over here and trust the process and keep continuing on. But is Bitcoin a hedge against inflation? This is the question that we've been waiting for a long time. And I think we're going to get to see the answer. We are living through probably the most exciting time, I think, in human history where, as far as if you were born around the time that I was, in the 80s, and you grew up without a cell phone, and then you saw the kind of evolution of tech from where it began to where it is now, I think it's hard to argue that there's any greater time of innovation in human history than now. And the way it is the way it is affecting the entire population is just unprecedented, I think, at the end of the day. So it's exciting to see it happen. And it's also scary, right? What we're looking at now is moving into basically the transformation into the digital age fully with, essentially some sort of digital payment systems, whether that ends up being, central bank digital currencies only or some hybrid of central bank digital currencies along with traditional cryptocurrencies as we've known them up to this point. Or we end up in a position where everybody starts using cryptocurrency. That's yet to be seen, but we get to live through it and see it kind of evolve. Obviously, my ideal situation, leaning more libertarian in a lot of cases, would say that I would like to just see Bitcoin become the one world currency, essentially, at the end of the day. Obviously, you need big, Lightning Network and stuff like that built on top of it. And a complete removal of, the power of printing your own money from, federal governments across the world. I think that would be beneficial to the individual. That's kind of where I lean as far as it goes, but who knows where it's going to head fully. Obviously, I think, a lot of these central bank digital currencies are coming on a lot quicker than we expected. We got the FedNow payment system really kind of accelerated here. We're looking between May and June now. June, I think, is what we read previously. So I think that is coming along a lot quicker. Now, of course, it's just a payment system, but don't be fooled. That is kind of the precursor to essentially a central bank digital currency. And that's kind of the next step. I didn't think we were that close to a CBDC in the United States. And, if we end up with a CBDC controlling the world's largest or only, at this point, reserve currency, things could get really, really interesting really, really quickly, especially with the decisions that, the federal government decide to do with it from, anything from putting people into a welfare state to printing extra money to send overseas for different wars, etc. That, you can have your opinion about them, but at the end of the day, it does devalue your money and it makes it harder and harder to live your current lifestyle, whether you are upper class or lower class right now. At this point, everything that's happening is going to essentially hurt your lifestyle, I think, and make it harder to continue living your current lifestyle. But that comes with the territory, right? And that's kind of some of the things that I prepare for or try to prepare for mentally. I think it's very hard to come to the acceptance that we are coming into a period of great change. And I think along with that change is going to come a lot of strife and a lot of struggle. And you can kind of see that start to kind of take fruition now as we're moving into it. And I think that there is potential for it to get worse. So, you know, preparing for that is something I do. I kind of do in my head nonstop because I do see it coming. And I think the end result at the end of the day will definitely be positive. I just think it's going to take a little bit to get there. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.